Morning. All right, ready? So markets are up here. Well, they actually went up after almost a little while after the close yesterday, and they're backing off from the resistance, which was anticipated. And we got the old highs up here. Now we're looking at this. Is this the end of the rally, or is it possibly the new beginning of another one that's going to go on to even further highs? So clearly we got this bottom that was put in place that took a little over a month, which was rather painful from the point of view of just the erratic wide range bars whipping back and forth and the uncertainty about that time. But notice, we always like to do little lessons here while we're going over things. I don't know why it would sound strange, Alex. Pretty much everything's set up the same, but I can't look at it right now. What's happened here, just look, and charts are pictures of what everybody believes and what they don't with their money. So big wide bars like that obviously say that the majority are selling or there's very little demand and things drop really, really fast. And so while you have bars like this that are overlapping, if we were looking at the cash market or the ETF, you'd see a lot more gaps. So, so gaps and tails and big wide bars are a reflection of uncertainty in whatever it is that you're trading. And then once the certainty comes back, whether it's to the upside or the downside, the ranges begin to contract. And that's what we see happen here. You have fewer overlapping bars and the ranges begin to contract, and you have what we had here with a correction bar, move up. And so this is our void concept right here. There was nothing between here and here. So where the move went with relative ease up to this level. Now, at this point, just based on basic support and resistance, the expectation is for this upward momentum to at least stall for a little while. And it's already begun to do that as, the sell orders came up into that area there. You see the tail that's beginning to form, or even on the hourly chart, the trend is still up. We did get a wide range bar that is signaling the end of a move short term after prices were moving up for a little while. So now as they pull back to the support here, buyers begin to show up. However, you've got a retracement back down to a wide range bar, which typically isn't a good sign for continuation, especially after prices have gone up for a little while. Whereas, if you had a wide range bar, and prices pull back into the base, it could be a little bit more understandable, meaning that you had the start of the move and there's a bottoming pattern and traders are still a bit apprehensive about the continuation. In any event, so I think what we see here is obviously the stall. Maybe we go sideways. The last thing we want to see is prices break down below here. But some sideways chop, maybe for a few days, could lead to much higher levels. I don't know why, George. Hold on, I did do an update on Zoom. Let me just check and see where it's going through. I see why.
It reset some of my settings there. Why it did that, I don't know. Anyway, it should have defaulted. How's that? All right, cool. Yeah, I don't know where it was picking up from, somewhere on the computer that at least it picked up some sound. Probably would have been better if it didn't pick up at all, and I would have looked at that. All right, so there we go with the S&P. So I think our expectation for today is probably some backing and filling here, and we see how things set up. Ideally it just chops around, but this is yesterday's low. So part of our systematic analysis without looking at multiple time frames is just simply to say the prior day's low is support and the prior day's high is resistance. It's already taken out the prior day's high. So this level is our first reference point of support. Now, because this is a bit of a wider bar than what these were, ideally it won't retrace more than halfway into that bar. Now, I don't know what's inside of this bar looking at this time frame because the data is all compressed, but you could look inside and say, is there some support halfway? But if you're a swing trader and you're just looking at this and just want a reference point, that's an objective point. You just, from a retracement point of view, you would just look at this and say, you know what, whatever is happening intraday, you could be at work, you could be wherever, in a taxi, looking at your phone, and just saying, whatever that number is in the middle there, as long as prices are trading above that, things aren't too bad. So that's a real easy way as a swing trader to just have an idea as to what's going on in the markets without even really looking at intraday charts of what's happening. So let's clear this up and move on. And Qs, which were lagging, they still have room. So as an intraday trade, right, or even as a swing type of trade, and this is very apparent when we look at the Russell. And I said this probably a week or so ago. I said if this market was going to get going, that the Russell was likely to do better because it was the laggard, and if it could get into its void, it should do well. So here, the same concept applies between the S&P, which we already looked at, is up at resistance, and the NQs, or you can look at QQQ, is not up there yet. So this has a greater probability of continuing to move. Now, you got that 8,000 level, the big whole numbers come into play. So keep that in mind, and it is in alignment with this congestion there, but this has more room to go before it gets up to that high. And we'll see if it can do that, or whether, the same analysis. Yesterday's low, first support, the middle of the range, give or take, it should hold the middle of the range. So is it a case of relative weaknesses? But yes, that's exactly what I'm saying, Howard, is that when markets begin to move, now this one's already moving, right? But when markets begin to move, and looking at the Russell, which was showing relative weakness, and it was hanging down here, it was on the edge of falling into the abyss here and into the void, and it survived. And this was the laggard. So and for two things, it brings up the rear. This has a void, and the weaker is also going to be the one that shorts are going to go after, because it makes the most sense. Because if this did break, and it did try to break, you can see the peekaboo under there, it's going to fall like a bag of rocks, and you're going to make a lot more money than shorting the relative strength. But in a turnaround situation, the junk tends to move faster back up into the void as shorts cover. And so it's just a phenomenon that happens all the time. You could even apply this to a sector, and that's going up, and say the leader goes up has been leading the way up in that resistance, money will gravitate into the dog. And so, it's an interesting concept, and, it's been happening for as long as I've, come to realize it many years ago. So the Dow has been leading, and you can see it's up at resistance and backing off already. So we should just approach today with a point of view of things are still good, but they're at resistance, and it just makes sense that there's going to be a hesitation to commit further in an area where there's obvious sellers. Right? Pretty basic, no trend lines, no indicators, just look to the left, common sense. There's the Russell. You can see the same thing as the ETF. It's closing the void. Momentum is likely to slow. It doesn't mean it can't get through here. We just have a situation where these days had higher odds of trending higher, where up here, the odds are increasing that this will violate the trend or go sideways for a while. Right? Oil down here today, right? It came up to the top of the range. Look to the left. It's going to be sellers. What's the reaction there? Does it go sideways, or does it fall all the way back down? So oil's coming in here again, going back down to the bottom of the range. Bonds are up here today. We spoke yesterday about watching this at the 50 MA and the bottoming tail bars, reversal here, and that, we know that bond prices have had a pretty decent inverse relationship with equities. Not exact, but something that has been a good guide. So watching bonds, you could watch TLT. You want to watch interest rates, watch TBT. So interest rates here, you can see what they're doing. And gold, right? Pop back up. We looked yesterday at the bottoming tail bar. You know, if I said it once, I've probably said it 1,000 times over the last 25 plus years doing this, telling people, just look to the left. You know, moving averages are subjective as well. There could be nothing to the left, like this right here. You know, but get the squiggly lines off your charts, get the fib lines off, the trend lines off, the stochastics off, and just look to the damn left and see where there were, you know, buyers before, or see where they were sellers before, and then you use your patterns and multiple time frames, you know, in a planned, intelligent way. Silver, right, popping up here, but you know, yesterday I said it came down really hard. The angle of retracement is another concept. Right? Look to the damn left, please. Don't show me your indicators and your lines. Right? So when things come down like this, right, it's like, okay, you drop something off, you know, your shelf. Well, you know, it's probably not broke. You drop it from the 5th floor, and you know, things are going to be damaged. And this is a little damaged here, but the trend is still up. So that looks good as well. Transports we typically look at, right? They brought up the rear like the Russell. That's what they typically do. That's what they did. They're up at resistance. You can see here on the weekly, it's been in a trading range for the majority of the year. So now things are stalling at this point. So I think let's try to avoid today possibly being a frog in the blender day, or a commission generator as the markets digest coming up into this resistance area and the move up. You want to look at XBI? Sure. You know, Europe now is coming to the realization that, you know, magic isn't coming over there, and they're in a problem, and they're cutting interest rates. And so, you know, now things will improve there, hopefully, and we'll see what goes on with China. And we've got all this, you know, uncertainty going on around the world, but maybe that's what drives this market higher, even beyond what is already a very, very long bull market, and into what we would hope to evolve into very irrational exuberance as the markets continue to go higher. Biotechs. Nice move off of the low into resistance, converging 20, 50, and 200. Not the place to enter, but possibly a bottom here. And you can see it came down the slightly lower low, a nice weekly reversal. Let's see what it looks like at the end of the week. So this may be the start of something where now, you know, the bios bring up the rear. You know, a lot of them gotten beaten down with healthcare. So pharmaceuticals, you know, look at how they came up. They've been junk all year. So maybe, you know, money's going to gravitate end of the year into the dogs. IBH. What was it? IHI. Is that a healthcare? Let's see here. I should have that up there, right? Medical devices. I thought it was some kind of medical thing. So, but while wild and whippy, it's held up better than pharmaceuticals. So maybe that's going to break out. Yeah, our internals here are telling us be careful, but the charts are telling us be careful, of course. You know, there you go. You know, the wrong way option traders, you know, were what was supporting this down here. Didn't mean that it couldn't go down, but you know, this was a reason to think maybe it could hold. And so now, as prices have moved up, you know, they've been jumping on board, and you can't blame them for that. But here you can see, well, here's the gap. So they started really getting there on the gap, and here as it went sideways. And now, coming up into the lower band, we got room to 0.80. So if the market should push up, there's a little room there. And, breadth is getting close to 200. So as these line up together here, we know that risk is rising, and you can see the long-term breadth is up here into the red, and long-term volume measurement is up here. So we definitely have some concerns about the continuation here. It hasn't been, that big of a move from breakout, which happened on a gap, to where things are. But let's see. I mean, this could chop around for a while. We got the Fed next week, so there's going to be hesitancy about that. I mean, these things could work their way off coming down while this chops around. So that's what we do day to day. We keep an eye on all of these things, and read the tea leaves, and then look at the patterns, and give our best view as to where things are likely to go, or like maybe today, not really go too far, but really, more of a day of stay out of trouble. Rotation into value. Yeah, I would say so, Deb. I mean, that's another way of just saying, hey, you know what, money gravitating into the dogs, that have been beaten down. All right, let me turn it over to Dan. Guys, I'm going to a meeting here for about an hour and a half here in Sunny Isles, where you're going to have all these, developers and politicians talking about the future of Sunny Isles. And so I'm going to go there for about an hour and a half, and then I'll be back in the room.
Oh, wonderful. A lot of hot air at that meeting.
Again, Tim in YouTube is asking about CZZ as a long, or has it moved too far?
No, we had that yesterday. McGraw gave it to us, and I said I liked it. I came close to giving it as a long. Here's the daily on my bottom left. It consolidated 5 bars at resistance. Yesterday was our, you call it an event bar. I call it a give me a something something. And yesterday was that bar, bullish 15-minute chart. It was a buy on my list today over the high, but now we got to deal with a 50-cent gap. So ideally, 30-minute high, or, a nice pullback 50% into this. But the answer, is it extended? Is absolutely not. It is just, all right, Greg, I'm not sure how to do that.
Okay. And look at your top left of your screen. You see, it should say live on YouTube.
Okay, but I didn't know I could do it if you started it.
Well, just if it's there.
It's not.
It's not.
No.
Okay, whatever.
No. All right, so, and then you got a bullish weekly, even though it's up 3 bars, it's controlled. So anyway, that was a long answer. Let's look at our opens here real quick. On the weekly options trader, alphabetical ADI, we did a put spread. That looks great. Boeing put spread, we covered half, 60% of max premium right into this climactic sell setup. Just in a couple hours, making 60%. Look at it, very, very bullish. 15-minute chart. We'll be raising the stop today. And, maybe closing it today or tomorrow. Hey, Flyman. Goldman, we have put spread expires tomorrow. We're in trail mode, and it's less than 5 cents right now. Finally, NVIDIA put spread, we have 2 of them. One that expires tomorrow and another one for next week. And it's gapping up over yesterday's high, so that looks great. And I'll be tightening the stop now. Swing trader, alphabetical, Cara, marijuana stock, had a nice reversal 2 days ago and looks good. Dish, we've been in trail mode. McGraw, I don't know if you sent it to me or somebody else, but some other crazy service gave this as a buy today. It's like, where were you here when we got in? I mean, we're already out of a third in the trail mode. eGov, oh, finally, we bought this little breakout right there. On 9.5, we had to sit through some pullback, but our stop was way under this bar. And now it's acting much better. So we can move our stop now to this bar, 2065. Let me do that now. So now we have a nice pivot there. Google, we are long stock, closed at the high, gapping up. That looks great. We'll raise the stop. JCI, breakout that we